Mellencamp there. We're at 8:42 now. It's 18 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time to check in and find out what's going on with your money on Wall Street this morning through the good auspices of our friend Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. How you doing today?
Good morning, Dave. Halfway through the week, and let's face it, this is the last full week anyway, of the quarter.
Oh, good Lord. Yeah, last full week of the month, last full week of the quarter, which means as we get closer to the end of this week and the beginning of next week, we're going to see some wild swings as a whole bunch of funds decide to balance their portfolios. And with the ups and downs we've had for the last couple of weeks, I got a sneaking hunch there's going to be a lot of balancing taking place. What do you think?
I think there will be. I mean, we've seen a lot of volatility this quarter, and I'm not so sure it's over.
No, I don't think so either. The VIX, by the way, is up to 25. It was hovering in the 14 range for the longest time. Then we started dropping things out of planes on Iran, and all of a sudden the VIX has gone crazy. Yesterday, for the blue chips anyway, I'd call it just shy of a hold steady day. The Dow was down 0.18%, just 84.5 bucks. S&P was down by 24.5, which is also modest. NASDAQ lost over 0.8%, down 185 bucks, but the Russell 2000 actually pulled out a little under 0.5% gain for the day. One of my tip sheets said it was mostly just skittishness on software stocks, and just looking at the indexes that rose and fell accordingly, I got to assume that was mostly the high-tech software stocks that scared folks yesterday.
You know, as best I can tell, that's probably true. I read a couple articles about some short selling and still going on, and then so who knows what sector got hit the hardest, but the indexes as a whole were going the wrong direction. But Dave, I got to say, it looks like this morning we may get a little rebound.
Well, that would be a nice thought, especially given the fact that I was a little bit leery off of the world news that came out, because that's going to drive the market more than anything else by and large. With the 3,000 new members of the 82nd Airborne Division reportedly en route into the Persian Gulf region, are we talking, are we not talking to Iran, all the gossip and news items that come out on that, we're into that level of uncertainty, which investors generally dislike intensely. And then economic news that we start the morning out, none of it really sounds particularly good either. Import prices, I gathered, went up a ton more than we expected them to, huh?
They did. The expectation was for them to go up about 0.7%. They actually went up 1.3%. So that was a much bigger jump that was expected. I will say it did not. It did hurt the futures a little bit because they were up. I mean, the S&P, the Dow was up as much as 500 points earlier. It's down about 300 now. So, but still, we've got some nice, solid green ink this morning.
It does. When I look at the price of oil staying under 90 for a couple of days, that probably didn't hurt the markets any either. The other side of the fence, basically, it's all news down the line. Mortgage applications, which shouldn't be a surprise with the 30-year mortgage rate starting to get dangerously, the 30-year bond rate getting dangerously close to 5%. Mortgage applications fell by 10% last week, and you found a tip sheet article that scares the pants off of me. You can bet on just about anything, and the odds of a recession are one of the things that gets published out regularly. We used to be under 1/3%, under 1 out of 3 chance of a recession. You've got an odds maker that's saying it's up, could be as high as almost 1 in 2 now, don't you?
We do right now, depending on who you look at. Moody's Analytics has the possibility of a recession in the next 12 months, somewhere over a little over 48%. That's up from 30%. So that's a big jump. And there's a couple of other companies that also put their predictions out there, 40, 45%. So Nobody's hanging around 30% anymore.
It doesn't sound good on that level. And it probably doesn't hurt a bit that Citibank's analysts this morning say they expect, not just possibility of, they expect to see $150 a barrel oil before this mess is over. And that's pretty much the cause of the recession concerns primarily.
It is. So far, we've been able to hold off 150. So hopefully we can continue that effort, and that would be a good thing.
Absolutely. One of those nothing reports that we generally blow right by every day because it comes out on a routine basis. The Standard & Poor's Global Business Index comes out yesterday, and the firm's initial read on business activity in the U.S. showed that March, its combined gauge of manufacturing and services output hit an 11-month low. Got to believe they probably pulled out defense stocks out of that before coming up with that, because we got to be buying from the defense contractors, don't we?
I would think so. That would be manufacturing, but services,
Yep.
yeah, they're both hanging in there pretty low.
Absolutely. Other tidbits that we're floating through today, Apple is expecting to see an increase in their sales this year. Their market share is supposed to go up this year, and they're announcing that they're going to reboot their artificial intelligence again. Look for a Siri button to get added in about June 8th. So that's getting some excitement for Apple if they can increase their market share by a little bit. On the other high-tech front, Meta really got whacked where it hurts yesterday. They got hit with a $375 million judgment out in New Mexico because they weren't doing a good enough job warning kids that, gosh, what a surprise, people, social media is dangerous. I'm not sure I know what they were supposed to do. Do you?
No, I mean, I'm not sure exactly how they're supposed to limit or what they're supposed to do from that front. Another front with Meta is they brought in another executive who left about 5 years ago, who must be big in AI because they're bringing him in, I think, to help, ramp up and do a better job on their AI front.
Oh, goody. Just what I need. One more thing on Meta telling me what I probably ought to be watching and still what I want to, right?
Exactly. Somebody's got to tell you what to do.
That's it. There's a new AI chip in the marketplace. The ARM people that make the chip models that go into your cell phones, they've got a new AI chip coming out. NVIDIA's got a new tiger in the jungle. And I got to share this. We've been watching the pictures of long airport lines with the TSA people sicking out and short staff on that. Delta has announced that they're going to terminate their fast track for Congress people. They want to fly Delta. They're going to have to get in line with the rest of us unwashed masses.
That should have happened a long time ago.
Like at the start of the airline. I love stories that invoke justice. It just feels good.
They should have to stay there.
There are some reports out this morning. The housing market is obviously one of the big market movers that are out there, and I gather KB Homes had kind of a rough quarter, huh?
They did, Dave. They missed on their earnings and their revenue. Earnings, they missed by 3 cents a share at 52 cents. Revenue slightly below expectations, but putting a little damper on them this morning. They're down almost 3% before we get going this morning. One of your favorites.
I read that KB had also reduced their guidance. They say that the war is already hurting their home sales, so you put guidance and a miss together, they're probably not going to have a good day at all.
Yeah, they're saying, you're right. Their forecast is, housing revenue and deliveries missed on what they expect to do this next quarter as well. So your favorite company, Chewy, they came out with a report on their adjusted EBITDA that beat the estimate significantly. And so it has Chewy trading up 10.7% this morning.
Wow.
Yeah.
That expensive prescription cat food I buy my cat must be helping them, huh? Any other indications you got?
I got a couple just not even really reports, but we've got some of the gold mining companies, Newmont, Fremont, those guys are seeing some bumps this morning on the ease of oil prices coming down, causing gold and silver to move up a little bit today.
Alrighty. So resetting the table, it was an off day on the major indexes yesterday. The small stocks gained a little bit in the process. I'm seeing some good news this morning. What are we looking at about 45 minutes before the opening?
It's some nice news, Dave. The Dow's up almost 85 basis points or 85 100ths of a percent. That's $393. S&P 500, same ballpark, up about 0.8% or $52. NASDAQ 100 is trying to get to 1%. It's at 0.96% right now, or $231. And the big winner, Russell 2000, up 1.02% right now. So good moves, it looks like, at the open this morning. On the other side, we're getting a rally in silver and gold as well. Silver up 4.7%, gold up 3.1%. And then we're liking what crude oil is doing, down 4.3%, Dave, to $88.39 a barrel.
Starting to figure out some psychological barriers. At 100, we sell everything that's not nailed down. If it's under 90, we start buying everything that's not nailed down. I'm starting to figure this out. Looking across the pond, Asian rim was almost universally green this morning at the 6 a.m. close. Mainland Chinese indexes were up by about 1.5% on balance. The European markets also happy looking at our futures. Median European index is up by about 1.2% halfway through their trading day. Getting a retirement plan together should not be based on a morning future update. It should be based on a plan. How do I find you to get a plan for my retirement, Philip?
You're absolutely right. And folks out there I know are getting a little seasick of the ups and downs and, all the volatility in the marketplace. And that's why it's important to have some kind of plan in place. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your appointment for us to talk about what's happening in your portfolio. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And us back here together again tomorrow morning. One more to tie the ribbons on the second to the last day of the week. Have a good day, my friend.
All right, man. You too.
Yes, I did almost forget it was Wednesday and not Thursday today. You could tell, couldn't you? Take care. It's 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Stay tuned. Catch us tomorrow, same time. Until then, have a great day. Bye now.